Gold prices held near unchanged on Christmas Eve, trading near 26.12 as the market kind of looks ahead to what comes later this week and next week. But ultimately, gold prices, after making new all-time highs back in October, have struggled to get back to those levels. They've seen a modest pullback, obviously, with last week's FOMC rate cut, and then kind of what came after, which was more of what they're calling a hawkish cut, as the Fed kind of did cut rates, but then later came out and said, we're not sure when the next cut's coming, after the market had already priced in some aggressive moves. But ultimately, gold prices kind of waiting for that, and the dollar continues to move higher, which is an obstacle for higher gold prices. Likewise, today, we saw higher Treasury yields and higher Bitcoin. So all the everything kind of working against gold was, but gold just kind of sitting there treading water in what was the narrowest trading range since going back to June and hovering near 26.12 to end the day. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You will see that volatility kind of holding steady today. Didn't see a whole lot of movement in volatility as the markets remain quiet ahead of the U.S. holiday. And last, let's talk about positioning. What are speculators doing? Well, as of last week before FOMC, speculators were exiting their net long positions. It'll be interesting to see as we've seen, markets kind of readjust and shift to now what the Fed says could be 1 or 2 rate cuts in 2025. It'll be interesting to see how gold reacts to that as we move forward, given that gold prices a lot of what it does off the Fed, but it also has some other variables in there as well, as rising geopolitical risks and other inflation risks and all that. So it'll be interesting to see what happens to the positioning when we get next week's CFTC report. So midweek and Christmas Eve, gold prices holding steady right around 26.12. Not seeing a whole lot in today's range or in today's price action as the market awaits what comes later in the week, which is a very modest economic calendar. And then next year, we'll be looking for put the 2024 into the books and look forward to 2025.